Essentially, we thought it was just a U.S.-China, trade war on one front, and now we're realizing that that's been opened up and even probably, culminates Canada and possibly even Europe. So if we're dispassionate about this and we think about what's going on, for interest rates, there are four key components. One is you're changing your growth outlook. Second is the change in your inflation outlook. Third is a change in your Fed policy outlook. And the fourth is risk premia or term premia. All of those components that govern the level of yields are headed down. Now,
will you say that about inflation?
I would say that about inflation, too, because I think that it comes with slower growth, and you're seeing weaker commodity prices as a result of that.
So we get a short-term, one-time inflationary bump from the tariffs?
You may get that, but I think it gets overridden by the fact that global growth probably ends up slowing down.
Okay.
So it makes sense to me that, forecasters for the Fed would start to think about cutting those rates. Key point to look at is the dollar. If the dollar gets stronger, that will really trigger the Fed to go aggressively.
Because sometimes we say that's equivalent to rate hikes, a stronger dollar.
Well, that's correct. It slows global financial conditions, and that's a problem. The other is credit spreads. If credit spreads get aggressively wider, that tightens financial conditions, and that will also prompt the Fed to go faster.
Kim, do you hear all this and think, I better change everything, I better sell, I better buy? I mean, December was a great buying opportunity in retrospect. What do you think of conditions now?
Well, it is a turbulent time. We know that because we've gotten some good news, economically speaking, today, and then the tariffs and the fear of what the world is going to look like in the next short term and in the long term. But here's the thing, short term and not much can change. You just can't put up a factory in a new place or start ordering product from a factory that doesn't exist. It just doesn't. So we're kind of stuck with the world as the way it is. But I pose to you that politically speaking, there's a whole lot going on in the world, not just in America. There's a change of guard happening over in Europe. There is friction in China. And, we have next year's election. So longer term, we still don't know. We never know. But I'm going to make the bet that we are still going to be globally integrated at some point, just because that's the way things have worked for the last 200 years.
Sure, and if that's the case, so last time we talked about a couple of names, including Intel, that you would like and own here, and obviously it's been an awful month for Intel, so do you buy more? Or has your view changed?
No, my view has not changed. And I think Intel is a poster child for what has to go on in the world. Even if you would like to put up a new fab somewhere else in the world and you're not Intel, you're going to be China, you're going to make your own semiconductors, you have to figure out that process, and it's going to take you years. So I don't know how economically or even politically viable rebuilding all these industries within your own walls is good. So that's what gives me hope.